Good morning, guys. Good morning. So today is quite an interesting day. I think this is quite an interesting week because today we have bank holiday, right? We have bank holiday in the US, we have bank holiday in Canada, we also have bank holiday in France. So of course the liquidity is not it's not gonna be huge. Okay, the liquidity is not going to be that much, but still, I still believe there is going to be enough liquidity to make a good analysis. Especially today, we don't have big news, right? We don't have big news today, so that's going to be um, better for us. That's going to make everything a lot easier. All right, that's going to be a lot easier. Um, so let's take a look here. What we could do here is we can make an analysis throughout all of our charts, right? Give me 1 second. All right, so let's move forward. So what we're gonna be able to do is we're gonna be able to make an analysis throughout all of these pairs. All right, let me close this stuff. All right, so we're gonna be able to make an analysis throughout all of these charts and make sure that that we trade appropriately. For example, look at this chart. Even though the price is moving inside this channel and it looks pretty consolidated, it's still very clear, right? I mean, the support is being respected, and from here we can expect something very important, right? Either another push to the upside, right? Reaching this previous resistance once again, or a breakout and retest to join the sellers. So this is what we are going to do. We're going to make an analysis and make sure we consider the most likely scenarios to happen, and then we're going to trade appropriately. All right. So it's actually trading is not hard. I mean, it's very simple. Trading is very simple as long as you know how to read your charts. It's very simple, but it's not easy, right? Simple, not easy. Why is it not easy? Well, it's not easy because you have to make psychological decisions, financial decisions, almost on a daily basis. And that's never going to be easy, all right? Making financial and psychological decisions, it's never going to be easy. So that's why it's hard, all right? All right, so let's make sure we go through an analysis. Look at gold. Yesterday, gold had an incredible push. I was taking a look here at the chart yesterday. I was taking a look at this upward trend, and I was like, huh, will I buy, right? Will I buy here? And then the news were going to be given. And so I decided not to open a position, of course. That was the most conservative approach. But look at this. The price, look at this type of movement. I would have, put this type of stop loss below the previous lows, right? For the price to have, some space to breathe, right? And look at this, the price went straight up, and that was, look at this. Oh, and the price reached this level. There is not a way for us to know exactly where the price is gonna stop, flying. But anyways, at least we had some reaction to key level, so key level. So that was like a 20 to 1, right? That was, let me take a look here. Actually less than that. Like 10 to 1? Yeah, 10 to 1 actually, depending on the stop loss, right? Depending on the stop loss in the entry point. If the entry would have been down here, yeah, it would have been like 20 to 1. Anyways, that was an incredible push to the upside in gold that we got yesterday. And again, that's just a push created by the by the news. That was not a look at the size of all of these candles, and then look at that, right? So that wasn't, a spontaneous movement. And type of movement, with that type of movement, we can believe that there is definitely going to be some type of correction, right? Because the price can't keep flying, right? I mean, the price of gold can't be that one. I mean, it can't keep flying against the price of the dollar, right? So it needs to have some type of correction. There must be a balance in the market in every single commodity, in every single product. That's how, the market works. There is supply and demand, and the prices they need to come to a balance, right? Depending on that supply and that demand. So if there is too much supply of a specific good, its price is gonna decrease, right? But if there is a lot of demand, its price is gonna increase. That's very simple. And the market is always gonna try to find this balance. So that's why we always have this type of corrective movements, all right? Okay, so from here, look at how the current candle, the current 30-minute candle is reacting to this level. Can you see that? So from here, we can expect another push to the upside or just the price, dropping. But that's why I wouldn't do anything here, even though we have, a breakout, retest, and rejection of an important level. I wouldn't buy here, right? I wouldn't buy here. Let me take a look at the 21 moving average. Do you see it's not loading? Let's refresh this. Okay, so even though we have, this type of breakout and retest and rejection, I wouldn't buy. All right, I wouldn't buy. And the reason why I wouldn't buy it is because I don't know if the corrective move it's gonna stop there. All right, I don't know if the corrective move is gonna stop there. So that's the reason why. Let me 1 second. This is loading. Huh, taking a while here. All right, so in the meantime, let's take a look at Euro USD. So Euro USD, I don't want to miss the opportunity to tell you guys this is the end of this movement downside, which was an important movement as well. This is the end. All right. So those who want to open buying positions in here, I mean, this is the time. All right. This is when you should start buying Euro USD. So we're gonna make sure that we go through a whole analysis as to why this is the end, but it's not very hard. I mean, the price is dropping and then it lost momentum. And now, I mean, here we have an order block, right? And you can see how the price reacted to this previous level. So this was an important key level, this one over here. Okay, so that was an important key level, and now the price created a consolidation period over there. Can you see it? So the price is dropping, it lost its momentum, and finally it created this order block with these rejection candles, right? Of an important previous key level. So that's good enough for me to believe that this is the end of this descending movement and the beginning of a new ascending one, right? So Euro USD, just look for buys, guys. Look for buys. This was a previous resistance, so I would be waiting for buys above that resistance. I mean, those are safer buys. If you want to open buying positions now, you could do it, but the stop loss would be huge. I mean, let me erase this. If you open a position now, your stop loss would be huge, would be this type of stop loss, right? And if you want to have a 2-to-1, you would be looking for 42 pips, take profit, something like this actually until this level. But that's a huge movement. I mean, if you're willing to wait that much, be my guess. But personally, I would wait for the price to go higher, retrace a little bit more, and then if there is an entry signal, like a candlestick pattern, then I would go long with a tighter stop loss. Okay, something like this. And with that, I could have a 2 to 1, maybe, sorry, a 3 to 1, or maybe 4 to 1 position. Okay, so from here, I'm definitely looking for buys in Euro USD. I think there is something wrong here with my trading view. Later on, we're gonna take a look at gold. All right. So this is the reason why I would be looking for buys in Euro USD. Don't look for sells. Would I be looking for sells? I would only be looking for sells if there is a clean breakout to the downside. I don't believe that's going to happen because today is a bank holiday in the US and in France, right? And in France, they also use the euro. So some banks are closed in Europe, right? So that decreases the volatility in the market, the liquidity in the market as well. So that's why I don't believe we're going to have the breakout of that key level, right? I don't believe there are enough, you know, positions being open in the market. I mean, not enough to push the price that much. But anyways, I would be looking for sells only if there is such a breakout and then a retest and rejection of that broken level. Then I would expect the price, dropping to keep dropping. But from here, I don't believe that's going to happen. So because of that, look at this. This is the support. This is a resistance. So I would be waiting for either this. Okay. So I would be looking for buys above those key levels. And if I get those buys, then I will be, I mean, if I get those entries, I will be buying. This is the 30-minute time frame, right? So this is what I would be waiting for, right? So this is quite, I would say this is quite clear price action. It's clean as well. It is not super messy. It is actually, very straightforward price action movements. So when you take a look at price action, you need to take a look at the market structure, which in this case, it is a descending market structure, right? You gotta take a look at the momentum of the candles, which in this case, the momentum is decreasing, right? You gotta take a look, at key levels like this one that's being respected, and you have to take a look at price action principles, like the one that tells you that if you have a consolidation period or indecision period, it is because the ones who are pushing the price in a specific direction are losing their strength, all right? And if that happens at a key level, it's because most likely the, the opposite participants, in this case, this is a descending movement, the opposite participants are the buyers, are joining the market. They're jumping in, opening positions in the opposite direction, and, most likely they are going to push the price in a new direction, right? So those are very, very basic price action principles, and they are right here. All right. So from here, I'm looking for buys in Euro USD, but just I would say it's worth it to make a top-down analysis to make sure that we don't lose any opportunity. Look at this. This is the daily time frame. All right. And from the daily time frame, I've been calling these cells since up here. All right. Since up here, I've been calling these cells. This push to the upside was caused by the news. I mean, this was a false movement. All right. That's why I also mentioned that that was going to happen, but that the price was going to drop all the way down, which is the case. All right. And that's just based on pure price action. Look at these candles and look at this descending structure. So that's the reason why it's not, I'm not a wizard. That's just very clear in the charts. All right. Now look at this candle. This daily, the previous daily key candle. I mean, this one over here, this is strong red candle. Looks very strong. All right. It looks very strong. And with this candle, I mean, if this candle would have been an spontaneous candle caused by the forces of the market, I wouldn't buy. Okay, I wouldn't buy here. Why I wouldn't buy? Because the momentum of that candle is very strong. All right, there is too much momentum in this candle, and the next one, I mean today's candle, could be strong enough to keep dropping all the way down below this level, right? Below that level. So that's the reason why if that if yesterday's candle would have been an spontaneous candle, I wouldn't buy now, right? Because on today's candle, it would be probable for the price to keep dropping, all right? And buying there would be a dumb decision. However, because this candle, I mean yesterday's candle, was caused by the news that was not an spontaneous candle, an spontaneous movement. And because of that, um, I know that the price is going to create a correction. Just what we were looking at in gold, right? Let me take a look here. So we're taking a look at gold, all right? And we can see how the price is creating a correction. All right, so that's going to happen exactly the same in euro, in the euro USD. So there is going to be a correction of this push to the downside, right? So this push caused by the news is going to have a correction. And that's the reason why I'm willing to open a buying position, especially today because we don't have any news. All right, look at this. Today is November 11. Look at this. So they're not big news. We just have these freaking bank holidays, right? So this decreases the volatility, the liquidity, but I would say that there is still enough volatility to trade, right? I'm willing to trade. All right, so that's the reason why opening positions today would make sense. There are not big news that are gonna damage our decisions or our trading or specifically our analysis, our price action analysis, right? So again, let's go to the daily time frame and look at that. Look at how this candle is being, rejecting this previous level, right? So how do you draw your key levels? Guys, how do you draw key levels? So there are people sending me messages asking me to teach them how to draw key levels. Guys, it's very straightforward. I know I've been talking about this before, but if there is people asking for this, why not? So you draw key levels when you have pivot points, right? So if you can join pivot points with one line, that's a key level, all right? The more pivot points you can join, you can link with just one line, the stronger that key level is gonna be. For example, look at that trend line. Can you see it? Can you see how many times the price has respected that key level? So that makes it a key level. All right? Same thing with horizontal levels. Look at this one. So this one was respected here, here, here. All right? So that's a key level. Okay, because the price pivot from there. Look, right? The price creates a pivot from that level. So that's it. Very straightforward. All right? Easier than what you thought. Very straightforward. That's it. Easy price action. Now let's go to the 4-hour time frame and see what's going on in this time frame. So this is the 4-hour time frame. All right, so from here, look again, very strong momentum of these candles. Look at the strength of those candles. And when you have candles that have huge bodies like these ones, I mean a lot bigger than the body of the previous candles. Look at the size of all of these candles, right? It's a lot smaller, right, in average than these ones, right? So when you have such momentum, you have to be careful about going against that momentum, all right? Be very careful. I would do it only because this was caused by the news again, all right? So from here, look, this level over here, let me use my tool. So this level over here is an important level. So from this time frame, from the 4-hour time frame, we got this breakout to the downside, and if the price is gonna keep dropping, sorry, till it touches this trend line once again, which is most likely gonna happen. Before that, the sellers, they need to allow the market to go higher, right? So this is the price of the euro against the dollar, right? The price that's here, which is this one, right? This is the price of the euro against the dollar, right? So the sellers, they want to make money, but they need to wait until the price goes higher. And then when the price it is at a more attractive level, then they are gonna open more selling positions, pushing the price to the downside and making more profits. So if they push the price from here to here, those are not gonna be, too much profits, or they are not gonna be the same profits as if they open their positions in here. From here to here, their profits are gonna be bigger. So those are some logics about how the market works. All right. So from here, we can expect a push to the upside in the 4-hour time frame, right? In the daily one, we're taking a look at uh, a week, right? So this is a week in the daily time frame, right? And in this time frame, in the 4-hour one, we can expect the price going up as well. All right. And from there, if we get a clear rejection of this previous level, then we can join those sellers, all right? And make important profits to the downside. Does it make sense? Okay, so from here, looking for buys. That's it. That's the analysis. So that's why I go to the daily time frame, and then I go to the 4-hour time frame, and then I can go to the 1-hour time frame, right? So the idea is to go from higher time frames to lower ones and look for the right entry in your time frame. So, for example, my time frame is the 30-minute time frame. So I make my analysis from the daily one to make sure that in the 30-minute time frame, everything is aligned and everything is clear for me. All right. If everything is clear, then I open a position. If there is noise or if there is a contradiction between the 4-hour time frame and the 30-minute time frame, then I'm not opening in any position. So that's the whole point of making top-down analysis. All right. So you spot the most important levels, and that's going to help you spot the right entries. So where you should be opening positions. So from here, again, my bias is more bullish than bearish. All right. So I'm looking for buys in here. In this time frame, in the 1-hour time frame, I'm taking a look here. Still at this, little consolidation period. Taking a look at this consolidation period over here, I wouldn't be looking for sales. So many people would believe, okay, if the price is dropping, look at the strength of this descending, um, you know, movement. So why would you be looking for buys? I would be looking for buys because this looks like the end of that descending movement. That's the reason why. And I wouldn't be looking for sales because this is an important support. So the price needs to break below that support. There must be enough liquidity to break below that support before I'm willing to open any type of selling position, right? So from here, I'm not selling, but I'm looking more for buys, above this level. So if I get those rejections, I'm buying. All right. So that's how it works. And that's pretty much it for Euro USD. Doing nothing now, just buys above that level. If I have to wait, that's awesome. Many people believe, but I want to make money now, and they just cannot believe that, there is not a signal available in the market now. Guys, that's the mindset of a gambler. That's the mindset of someone who's not a successful trader. If you have those thoughts, those feelings, I am 100% sure that you're not a profitable trader, all right? And that you're still in this, learning curve, which is okay, all right? Which is all right. Just it's time to learn. It's time to move forward, all right? So if you're willing to willing and able, if you're willing and able to wait, you will be able to make money in trading. So from here, just wait, be able to wait until what you want is formed in the charts. So when that happens, open a position, not before that. All right, so again, for example, here in Euro USD, when that if that happens, if that scenario that I just mentioned happens, then I'm gonna open a position. All right. Look, the price is still respecting this consolidation period, this order block. We don't know when it's gonna, have a breakout, but when it happens, I will be looking for buys. That's what my analysis says. And if that happens, that would be massive, right? That's gonna be the market validating my analysis, and that's when you can trade confident, with confidence, with no fear. You can risk 1, 2, or 3% of your account in that position with no fear. All right? And you know that if by any chance the trade doesn't work, it is not because you didn't make your things wrong, but just the market just didn't validate that position. That's it. All right? And you don't have to be wondering. You don't have to be, navigating in those negative thoughts. Oh, I'm not a good trader. I don't know how to make an analysis, right? But that's going to increase your confidence, um, your ability to open positions at the right time, and not based on emotion, on fear of missing out, right? Be careful of fear of missing out. All right, so from here we're taking a look at AUD USD. Let's make a proper analysis, a complete analysis for AUD USD as well. These are price action analysis, guys. I don't talk about fundamentals in here. I don't talk about fundamentals in my analysis, and there are several reasons why. First of all, because fundamentals, they are very unexpected. They are very difficult to manage. I mean, if you consider the fundamentals to make trading decisions, you have to consider lots of factors, right? So there are multiple things going on in the market. For example, if I trade all of these pairs, I should be aware of absolutely everything that's going on with the euro, right? With the USD dollar, everything that's going on in Australia, in New Zealand, right? In the whole Europe continent, right? So that's massive. I mean, I would need to know a lot of information. And also, I would need to know how all of that information interacts, right? To make a determination. And that's almost impossible because there are things going on every single day, every single hour in all of these pairs, right? So there are commodities that are affecting those pairs, politics that are affecting those pairs, right? Just banks' decisions. I mean, there are multiple things going on. So that's why I don't consider the fundamentals to make my determinations. I take a look here, all right, at the news to know that, to make sure that there are no news that are going to affect my trading, that are not going to affect my positions. But I don't take a look at, okay, so this is the economic, bulletin. So because of this economic bulletin, I have to make sure that, the euro, I don't know, I have to take a look at the expectations and what these news can cause in the market, and then if those are positive, then I'm going to be able to buy euro USD, and I don't do that, right? So my analysis are just pure price action based. So that's one of the reasons. The second reason why I don't take a look at fundamentals, it is because absolutely everything that happens with the fundamentals, absolutely every single thing that happens with the fundamentals is going to be reflected in the charts. Absolutely everything. So if I know how to read a chart, I will be able to know what's going on in the market. That's it. I don't need to know why the price dropped all the way down. I don't care, right? I don't care why the price came all the way down. I just know that the price touched This daily level, it provided a rejection of that daily level, and with that rejection, I know that the price is gonna keep dropping. Why? I don't know. Maybe something happened with the Australian dollar. Maybe something happened with the USD dollar that increased its value, pushing the value of the Australian dollar down, right? Making people selling their Australian dollars and buying USD dollars. Okay, I don't care why. I just know that the price came all the way down, respected some key levels, right? So I just know that the price respected this key level, this daily key level. It came down, breaking the previous support. It rejected that level again, providing this corrective movement and pullback. And as we got a dodgy candlestick, the price kept dropping. That's all I care, right? That's all I need to know, right? Here we had another trading opportunity when this level got broken, and then we got this bearish engulfing candle to keep dropping. That's all I care about. I don't care if something happened in Australia. I don't care if something happened in the US. All right. So if I know how to read a chart, I will be able to know how to trade. So everything that happens with the fundamentals, absolutely everything is going to be here in the chart, visible for me. So I don't need to bother with all of this background noise about the reasons why all of these movements happen. Okay, makes sense. So that's the reason why I don't care about the fundamentals. Okay, so take a look at AUD/USD. This one also looks like the end of this descending movement. All right, so if we take a look at some key levels over here, or if we take a look at the price action that's happening in here, yes, we have, as you can see here, we have a downward trend, right? Now, lower highs, lower lows being created. Now, this one over here is an order block, right? Or false breakout of a key level, of a previous key level, which is that one, right? And from here, look at this, the price is going up. So my bias in here is bullish as well. Just like my bias in the Euro USD one, my bias in here is bullish as well. So for example, this is an important level because it was a support here and a resistance here. Can you see it? So I expect the price to navigate a little bit more inside here. And then when we have this breakout, that's going to be my confirmation that the buyers are joining the market. They're jumping in, and that the buying positions that are being, or the buying contracts that are being opened with all of those bigger financial institutions are going to move the price to the upside. All right. So I would be waiting for this corrective movement or pullback, and then I would be longing AUD USD. All right. So this is my analysis as of right now. I mean, what's happening now. So let's go to the daily time frame and see what's going on in the daily time frame, right? So let's see if the top-down analysis says the same thing, right? It provides the same, the same bias. So look at that chart. What would be the key levels that you would draw in this chart? So based on just on what I said about how to draw key levels, what would be the key levels for you guys? Where would you draw your key levels, your pivot points, right? That's the question. Are you able to draw appropriately your key levels? For example, that's a key level, right? Like, right, that's a key level. This is another one, right? Can you see that? Okay, so this is another one. This is an important support. So when the price drops, if the price keeps dropping all the way down, I will be waiting for a reaction down here, right? Okay, so from here we have those levels. This is another support as well. I mean, those are the most immediate next levels, right? So let's take a look here. This one was a previous support and resistance, right? Can you see it? So now the price is reacting to that level. It is not, strong enough to believe that definitely the price needs to pivot from there. It's not that strong actually. I don't see it. I don't consider that that level, strong enough to believe that the price definitely needs to pivot. But from there, but still it's a level, right? We can see how the price created this consolidation period above it, and the price respected that level in here as well. Can you see it? But the price also broke above it here, below it here, and above it here. So that's the reason why I don't consider this one a huge level, a very important level, but it is a level anyway. And the price is now reacting to it. Look at that current daily candle. It's also a pin bar rejecting lower prices, rejecting that level. Okay, so from here I can expect the price to keep flying, to keep going up. Now let's go to the 4 hour time frame and see what's going on. All right. Okay, so from this time frame, look at the momentum of this downward push of that impulsive move. That momentum was kind of strong, right? That's quite a strong momentum. I would say it's strong enough to believe that the price is gonna keep dropping, right? Anyways, there must be a corrective movement always in the market. Always there must be a corrective push. So this one was the impulsive move. There must be a pullback. And if definitely these sellers, the one that are pushing the price down from up here, if those sellers are still in the market, if they are still, willing to push the price down, they are gonna keep, doing that, pushing the price to the downside. Okay, so that's a key level. Okay, so if those sellers are gonna keep pushing the price down, I would expect this pullback and then, this drop to the downside. So if that's gonna happen, um, first of all, this corrective movement or push to the upside needs to be created. We don't know how big this push is gonna be. We don't know if it's gonna reach this level over here. I mean, if it's gonna keep climbing until it reaches that level again, or if it's just gonna have a little bit of a movement to the upside before it keeps dropping. We don't really know that. That's why we can go to the lower time frames and spot those key levels like this one over here. That's a key level, right? Can you see that? Maybe the price is just gonna reach. Let me erase this. Maybe the price is just gonna reach this high, right? Before dropping. So that's a key level because it was respected here, here, right? And if you go to the lower time frame, like the 30-minute time frame, that's gonna be, a stronger level. This is gonna be like a pivot, right? Pivot. Can you see that? Okay, so from there, this one would be, in the 30-minute time frame, maybe the time when the price keeps dropping, or if we get a breakout, it's gonna reach that level before it keeps dropping, right? If the sellers are still in the market. Okay, so from here I'm only looking for buys, and only looking for sells if there is a clear rejection of those levels. Okay, this is in the 4 hour time frame. Now let's go to the lower time frame. Let's go to the 30-minute now. Okay, so let's take a look at my levels. So these are my levels. Okay, okay, so we have this. We have either this push to the upside, I mean this breakout, things like this, right? And from there we can expect the price to keep dropping, or, creating this breakout in reaching this high before it keeps dropping. All right? So from here, I'm just waiting for this, for any of these scenarios to happen. So if I get this breakout to the upside, which I believe is gonna happen, maybe not now, maybe it's gonna navigate a little bit more here before it breaks to the upside, right? So, um, crank. Okay, so maybe the price is gonna navigate a little bit more here before it breaks to the upside. But if there is such a breakout, I would be looking for this retest, right, to go long. That's it. And if the price breaks above it, I mean above this one, I would be looking for buys there. That's it. All right. Would I be looking for sales? Would I be willing to sell? Yes, I would be willing to sell only if there is a breakout of this level, right? To the downside, a retest and rejection, right? Then I would be looking for sales. Okay, that's the only reason why I would be willing to sell. However, there must be enough liquidity in the market to break below the support, and I don't believe there is such liquidity. All right, I don't believe there is enough money in the market to create this push to the downside. All right. So anyways, that's my analysis behind AUD USD. Of course, because this is a pair that's, affected by the USD dollar, the analysis is pretty alike with the Euro USD, all right? And it's going to be exactly for the New Zealand USD. Actually, it's going to be more similar to this one, okay? With GU changes a little bit because the pound has, it's very volatile. The pound is very volatile. It's more volatile than the New Zealand dollar or the Australian dollar or the euro. So that's why the GU pair has, a more, I would say, individual movement. More an individual analysis, a different chart. I mean, a little different than the other pairs, even though this one is also affected by the USD dollar. So anyway, let's make sure that we go through an analysis with all of these pairs, all right? Because we want to make money, right? Let's take a look here. I think my charts, they're kind of slow now. Hey Sergio, how's it going? I'm doing well. All right, so I just put some music. You let me know, guys, in the live stream if it's, loud enough. If it's loud enough. Okay, I think my trading view, I don't know why my trading view isn't loading. The heck? Okay, so in the meantime, let's go through the analysis in the New Zealand USD. All right. Okay, so this one also dropping to the downside. Yesterday's news were quite strong, right? I mean, strong enough to push the price all the way down from this high. Look at this high. That was an important level. And from there, I remember I was talking about these sales because of this consolidation period. But the sales were kind of those sales from up here, they were kind of risky. So that's why I didn't open a position there, right? So when you have, I'm gonna tell you why it was kind of risky. So when you have a movement to a specific direction, like to the upside, and then you have, a key level and the price is reacting to that level, you can open a position to the downside. Yes, you can do that. However, that's gonna be kind of risky because you're trying to get the top of that push of that movement. So if you want to get the top of the next movement to the opposite direction, yes, you can do that, but it's kind of risky, right? Because maybe the prices can, break above that level, telling you that that's not actually the top. So if you try to get the top always, you might get, stopped out, I mean, several times. So instead of doing that, my advice for you guys would be to wait until there is a confirmation that that is the top. That means that you're not gonna open a position at the top, which indicates losing some profits or losing some movement of the price in your desired direction. However, you can do this. I mean, if the price keeps dropping, I mean, if it goes actually in the desired direction, just wait until there is a pullback and join the sellers in that pullback, right? Join either the buyers or the sellers, I mean, the ones in the market in the pullback. So that's my advice for you guys. So for example, in this case, for example, in this case, I was waiting for, this is the top, this is the push to the upside, right? So even though this looked like the top, I didn't sell because maybe the price was gonna keep going up. Instead of, looking for those buys, sorry, for those sales, I was waiting for this breakout, right? And then a pullback. And if there was such pullback, then I would join the sellers, right? So in this case, the pullback was provided, but it was provided down here. Can you see it? So the pullback was provided down here and then down here, right? So that's the reason why, safer sells are at the pullbacks, not at the tops, right? So don't try to get the top of the trend because, I mean, you can do that, but it's gonna be kind of risky. So my advice for you guys would be to wait for the look at this. If this is a consolidation period, wait for a pullback and rejection of that level, right? Those are the confirmations that you need to be completely, confident that the price is going to be in your desired direction, all right? That the trend changed, that the trend is not, in this case bullish anymore, but it's bearish. Okay? Is it clear now for you guys? Let me know in the comments. I want to find out let me know if everything makes sense. All right? Let me know if everything makes sense. This is pure price action analysis. This is, in my opinion, this is very basic. But sometimes, people don't have the fundamentals. So, anyway, let's move forward. I don't know if, hey Sergio, can you please do me a favor? Can you take a look at the YouTube live stream and tell me if everything is okay? I think it is, but so let me take a look here. Let's take a look at New Zealand. Okay, so what's going on with the New Zealand? So with the New Zealand, we can have, I mean, we can see a very clear push to the downside in here. And with that push to the downside, we can believe that the price is gonna, as well as with the AUD/USD and the Euro/USD, the price is gonna create some push to the upside. So I would be looking for that push to the upside. All right. So something like this, right? Before it keeps dropping, if it's actually gonna keep dropping. However, the price is reacting to a previous key level. So for example, this one was the support. It was an important support, right? Let's take a look here. All right, so I think that TradingView is not loading appropriately. So guys, I'm sorry, I'm gonna end the live stream and I'm gonna open the live stream again in 5 minutes. All right, in 5 minutes. So I'm gonna close everything up and I'm gonna restart my computer because I think because I didn't turn off my computer last night, it is not loading appropriately maybe. So I'm gonna shut down I'm gonna head off now and I'm gonna reopen the live stream within 5 minutes. All right, we still have 5 more pairs to go. All right, so we still have lots of analysis to make, and today is quite a great day to trade. So talk to you within 5 minutes. All right, talk to you guys within 5 minutes.